Bismillahirrahmanirrahim. Welcome to NZ Tutorials. This video will give you a fundamental definition and in-depth understanding of debit and credit. And it's really very easy. What is debit and credit? Debit and credit are simply two words. You can say these are two signs or symbols used in accounting. It is same as plus, minus, subtraction, division, multiplication are used in mathematics. And what debit and credit do? Plus, minus, subtraction, division, multiplication, these all signs in mathematics are used to calculate numbers. In the same case, debit and credit, which is used in accounting, are also used to record financial data of a business. These financial data is usually called business transaction. So debit and credit, two signs are used to record financial data or business transaction of a business. So the question is why we record business transactions or why we maintain financial data of a business. Financial data of a business is recorded to manage their business or to manage their business operations and to grow their business. This is the reason why we record the financial data, and debit and credit is a technique. These two symbol or signs used in accounting are technique through which we record business transaction. The concept of debit and credit can also be explained with two simple examples. The first example is you have expressions happy and sad. When you have increase in excitement, it is happy, and when there is decrease in excitement, it is sad. It is called theory of emotion according to the science of psychology. And in another example which we used earlier, addition and subtraction, plus sign or symbol is used to represent addition and minus sign is used to represent subtraction. Through addition or plus we add numbers and number increases, and through subtraction or minus we subtract number, the number decreases. It is called science of calculation according to the mathematics. So in these two examples you got understand that there is something increasing or decreasing either in emotion, in science of psychology, which is happiness and sadness we explained earlier, and subtraction addition, there is something increasing or decreasing. So in the same case in business financial data there is something increasing or decreasing. How decreasing or increasing? Like when you are sometimes you are paying cash, sometimes you are purchasing assets, cash decreasing, asset increasing. Sometimes you are paying liabilities, liability decreasing, and sometimes you are selling your product, you are spending, so through selling your selling increasing, your cash also increasing, and as through spendings your expenditures are also increasing. So all these there is increase and decrease, and we through these increase or decrease in business financial data or business activities, we represent it through debit and credit. But we cannot say that debit is used to show increase and credit is used to show decrease. Sometimes increase and decrease is represented through debit, and sometimes decrease and increase also represented through credit. But there is a philosophy or a technique through which we use these two signs and we record our financial data. So you can say debit and credit, it seems close in function to plus, subtraction and addition like I have explained earlier. So the definition you got understand, but how debit and credit works with increase and decrease in accounting? For this you have to understand five types of accounts. In accounting there are five types of accounts: assets, liabilities, equity, revenue and expenses. And don't create hype in your mind about these five accounts because these are normal and you use normal in your life. Assets mean you whatever you own, your property, your bank balance, etc. Liabilities means you have to pay utility, your car lease installment, your house rent monthly basis, your electricity bill, etc. These are liabilities or responsibility you have to pay. Equity is used as a capital or investment made by the owner of the business. It is equity, or you can say that asset minus liability is equal to equity. And revenue means sales or income, and expenses mean spendings, whichever you pay. So these five are normal accounts you use in your normal life. So it's really very simple. So there is five accounts in accounting, nothing out of these five accounts. And in business activities The financial data are based on these five accounts. So there is increase and decrease in these five accounts. These two accounts, asset and expenses, when these two account increases, we use symbol debit, or we represent it through debit. And when these two accounts, asset and expenses, decreases, we use credit symbol, or we can say we represent decrease in asset and expenses through credit. And in these three accounts, liabilities, equity and revenue, these three accounts, when decreases, we use debit symbol, or we represent it through debit. And when these three accounts increases, we use credit symbol, or we represent it through credit. This is the functioning of debit and credit. Whatever is happen or changes in these five accounts, and through this technique we will use the specific legitimate sign of debit or either credit. So through these functioning of debit and credit, we got know, so debit and credit are signs or symbols used in accounting to record business transactions, and its functioning is related to five accounts which are explained earlier. So this is all about debit and credit. And if you know this technique, if you memorize this technique, which is very really very simple, you can record any business transaction. So in next video you will understand how to record an entry, and it's really very easy. Thank you for watching video. Please appreciate us to like, share and subscribe, and press the bell icon for notification of our coming new video. See you next time. Till then, Allah Hafiz.